Hi, this is Ernie. I'm that guy who had $6 in his checking account to now having millions of dollars. People have asked, hey, is there a possibility that I don't have to pay capital gains tax? That is very possible if you use Roth account. Roth account is where it's a retirement account, so you cannot take money out. You could, but you got to pay penalties and taxes and all that. But if you use that, you will never have to ever pay taxes on your capital gains. But there's a limit on how much you can put in. So once you max that out, what is the second option? To most people, they just open a brokerage account and pay somewhere between 10 to 37% in short-term gains if you're doing what I do, generating weekly income. So I'm going to show you how you could potentially minimize it. And I am going to show you my payroll from the LLC so that you can make the comparison. But before we get there, I'm going to show you what the tax rate looks like so that you have an understanding of what the short-term capital gains tax is and how you can benefit by creating an LLC. And then at the end of the video, I'm going to show you the actual amount that you are going to be able to visualize and say, ooh, yeah, this is totally worth my time. So let's go with a short-term capital gains tax first. Short-term capital gains, depending on your income level, you pay as low as 10%, as high as 37%. Yes, so if you made $100,000 selling options this year, you might have to give them $37,000. That's a lot of money. So is there a way for me to pay less? Yes, that's by investing through an LLC. And let me give you the biggest benefit of LLC, and it's not as straightforward. It has to be an LLC filed as an S Corp, which means you need to fill out 2553 form and get it approved, which doesn't take a lot of time, and most likely you'll get it approved. But once you do that, then you can start paying yourself. And once you start paying yourself, look at this. Solo 401k, right? So that's an LLC 401k. And just like typical 401k law, you can contribute up to $23,500. But here's what your company does. They can contribute up to 25% of your compensation. And how much is that? $70,000. Yes, this money is tax deductible from the LLC, and when you contribute, the money that you put it into your 401k is pre-tax, meaning let's say you make $10,000 and you contribute a certain amount, now your taxable income goes lower. So you get benefit on your side, you get benefit from LLC, and you can take home $70,000 without having to pay any taxes. Yes, that is the key. And of course, if you are older, then you can take more money. And now let's go to the payroll so that you'll be able to see the difference. For I don't know how many years now, I've been paying 37% capital gains tax. This has reduced my capital gains by a lot. So let me show you. When you become an employee by creating an LLC and filing as an S Corp, you need to pay these taxes, right? FICA taxes. But when you are employee, here I'm paying myself $10,000 every month. Look, my income tax is 8.95%, not 37%. Yes, and then of course the company has to pay for it. So even if you combine these, it's about 17%, not 37%. And my take home is actually lower. Why? Because I designed it that way. How did I design it that way? Because let me show you here. I am paying myself $10,000, but I deduct this amount for my 401k so that I'll be able to max contribute, which means I'm only paying taxes on $3,800. So out of $3,800, I'm paying this much money, and I'm taking home that much so that I can pay bills. And of course, I have other investment accounts that I use. And on top of that, companies matching, remember, up to 25% of your pay. So if you pay yourself $10,000, you can pay yourself $2,500 in 401k contribution. So in order to maximize this, I need to increase my pay. Of course, if I known this earlier, I would have done it so much earlier. I figured this out a little late, and hopefully you guys will be able to watch my video and benefit from it and not wait until it's really, really late to miss out on that opportunity. But anyway, company is now able to write off that amount, right? That's the amount company is able to write off. And remember, company only paid this much taxes. That's very, very little. That's like 8%. And what happens is I get to keep $2,500 and $6,200. So that total is $8,700 into my 401k. That's my money. That's not going to be taxed. Yeah, it will eventually be taxed later on when I retire. Plus, I get to take home about $3,000. And out of that, only tax that IRS is going to take is about $1,800. That's it, $1,800. So the amount of income tax that I have to pay from the employee side, which is my company, and from me as an employee is about 13.5% overall, rather than 37%. But remember, I am not even including, in this chart, I'm not even including how I'm paying my wife, so we keep more money to ourselves, how I'm paying my kids, where, it's an S Corp, so they have to pay taxes, unlike regular LLC, whether it's passed through, but they're going to be able to keep their money or make money. And now that they have a job, they can open a Roth account and put maximum amount every single year, so that by the time they retire, they're going to have tons and tons of money that they don't have to retire. They don't have to worry about their retirement. Not only this space that I use for my videos in my office, I could expense this too. I could pay myself rent. You could write that off as part of depreciation. So as me, I don't have to pay taxes. And as a company, I can expense that. Your cell phone bill, your internet bill, we don't have cable, so that we don't pay for that. Meals with your employees, right? You can get a car. It has to be over 6,000 pounds. I think it's 6,000 pounds. If that's the case, like it has to be a big car. Now you can write off you can expense your car payments, insurance, oil and gas, whatever that goes with the maintaining your car. You can get a new laptop, you can get a new desk, you can decorate, you can do a little bit of construction, you can travel, it has to be work related. So there are so much you could write off and potentially minimize this tax rate from 37, again, my tax rate is 37, down to 13.5, and further down to below 10%. This is what a lot of people are doing so that you keep more to yourself. I know this is confusing. There are a lot of words, things that I've thrown at you. I'm here to help out. And you could also Google this. There are plenty of people showing you how to do this. So depending on your income bracket and depending on the money you make, this might totally be worth your time. So if you have any questions, please comment and I'll respond to you within 24 hours. And things that I don't know, I'll refer you to maybe a CPA, my CPA, or other CPAs that I work with. And don't forget to like, don't forget to repost, and don't forget to, don't forget to tell your friends so that you guys can do this together. And remember, keep the money to your family rather than giving it to IRS, because the law, IRS law, allows you to keep more. You just have to know how to use it. Thanks for watching again, and I'll see you guys soon.